When most people begin trading with $100, their mind instantly jumps to the idea of getting rich fast. They picture themselves doubling their account in a week, turning it into $1,000 in a month, and soon dreaming of quitting their job. This exact mindset is what causes most traders to fail. Turning $100 into $1 million isn't about rushing. It's about learning to think long-term. The mindset that makes this possible is known as the compounding mindset. It's the belief that slow, steady, and well-planned growth always beats reckless speed. This compounding mindset is built on patience, discipline, and a vision that stretches far into the future. It may not seem exciting at first. It won't give you the thrill of big risky trades. But it's the same mindset that has built empires across industries, from Warren Buffett in investing to Jesse Livermore in trading. This is the pattern of thinking that helps you protect your capital, grow it slowly, and never destroy your progress. An average trader looks at $100 as pocket change, something small enough to lose. But a millionaire trader sees $100 as a seed, something to plant, nurture, and protect. If you keep digging it up to check its growth, you'll kill it before it ever blooms. In trading, that means you must resist overtrading, high risk, and random impulsive setups. Your $100 account deserves respect because how you handle the small amount shows how you'll handle the big one. Now think about this. If you grow your account just 5% per week, it doesn't sound exciting today. On $100, that's just $5 profit. Most traders laugh at that number. But over time, that same small growth leads to massive results. At 5% growth each week, $100 turns into nearly $10,000 in less than 5 years. And when you apply the same mindset to larger capital, the numbers explode beyond imagination. The rule is simple. Steady growth multiplied over time creates miracles. Most traders fail because they can't think this way. They risk half their account in one trade just to feel like they're winning fast. But after just a couple of losses, their account is destroyed and emotions shattered. This is where the compounding mindset separates real winners from emotional gamblers. Successful traders never measure success by a single trade or week. They judge it by a chain of disciplined actions repeated month after month. Take the story of Richard Dennis, a legendary commodities trader. In the 1970s, he began with just around $1,600 and turned it into hundreds of millions within a decade. He didn't achieve this through gambling. He did it through strict rules and consistent execution. His story isn't about luck. It's about patience, structure, and discipline. That's the exact mindset you need, even if you're starting with a fraction of what he had. The compounding mindset also changes how you look at losses. Most traders panic after a losing trade, thinking they've failed. But a trader with a compounding mindset knows losses are normal and already part of the plan. If you lose 2% today, but stay disciplined, you can recover it steadily without gambling. This emotional balance is what keeps traders alive in the long run. Once emotions take over and you start revenge trading, you've already lost the mental game. Now let's talk about emotional energy, the invisible fuel behind every trading decision. Trading is less about patterns and more about your mental state when you decide to act. If you're chasing fast money, you live in constant stress and anxiety. Every tiny market move feels like a major emotional blow. You can't think clearly under that pressure. Your decisions become emotional, not logical. The compounding mindset removes that pressure. It shifts your goal from get rich now to grow right. This shift not only makes trading calmer, it makes your decision-making sharper and smarter. One of the biggest mistakes new traders make is comparing themselves to others. They see someone online flipping $500 into $5,000 and feel like they're falling behind. What they don't realize is most of those traders take huge, unsustainable risks. The compounding mindset blocks out that noise. It's about your pace, your process, your growth. So imagine this. You start with $100, and your only goal is to make 3 to 5% each week. You've developed a reliable plan that gives you 2 or 3 quality trades a week, each carrying a 1 to 2 risk-to-reward ratio. You risk just 2% of your account per trade. On a $100 account, that's only $2. If the trade wins, you make $4. It doesn't sound like much, but after months of steady performance, it compounds. Once your balance hits $500, every win gives you $10. At $5,000, that becomes $100 per trade. The system never changes, only the number of zeros does. This principle is what allows small accounts to grow without destroying themselves. Starting small with this mindset has another hidden advantage. It teaches you risk control before real money is at stake. Many traders suddenly get access to large capital, maybe through savings or a prop firm, and lose it all quickly because they never learned to manage small accounts. Respecting your $100 is the same as preparing yourself to handle $100,000. It's the same game, only the scoreboard grows bigger. The compounding mindset doesn't mean being passive. It means constantly improving your craft while keeping your risk controlled. You're not chasing huge wins. You're aiming for consistent progress, trade after trade. Over time, those small, steady wins turn into a season of success. Some traders dislike this approach because it feels too slow. But ask yourself, which path truly leads forward? Would you rather spend 6 months chasing fast profits and ending up broke, or 6 months building solid consistency and skill? One gives you short-term excitement and long-term pain. The other gives you calm discipline, true confidence, and lasting wealth. The compounding mindset goes beyond money. It's about who you become in the process. When you truly adopt it, you stop thinking like a gambler and start acting like a professional. Professionals focus on systems, probabilities, and long-term consistency. Gamblers chase luck, hunches, and big wins. The market rewards those who act professionally and punishes those who don't. Your $100 account is not small. It's your training ground to earn the market's respect. In the end, compounding comes down to one rule: protect your capital, grow it slowly, and never rush. If you can do this with $100, you already have the mindset to one day turn it into $1 million. The amounts will change, but the mindset will always remain the same. Once you truly understand this, you'll see that your small account isn't a weakness, it's your biggest strength. In trading, patience isn't just about waiting, it's about waiting without self-destruction. Most traders believe they're patient just because they can hold a position for a few extra minutes or sit through a small pullback. But ruthless patience is something else entirely. It's standing before the market, watching price move just inches from your perfect entry, and still holding back because the setup isn't complete. It's watching volatility, movement, and temptation, and still doing nothing because you know waiting is also a trade. The market is built to break your patience. Every tick, every candle is a trap that whispers, "Act now." If you let those whispers control you, they'll soon turn into commands, and you'll follow them blindly. A trader who lacks patience sees a setup in every move. But a trader with ruthless patience waits only for the best setups. I once read about a trader back in 2003 who followed a strict rule. He took no more than 4 trades a month. He wasn't lazy. He just knew his strategy produced only 4 high-probability setups in that time frame. 1 month, he waited 23 days without a single trade. Then, on the 24th day, the perfect signal appeared. He entered with precision, managed a position perfectly, and made more in that one trade than most impatient traders earned all month. When asked how he stayed so calm, he said something that never left me. "If the market will still be here tomorrow, why should I rush today?" That single sentence holds the entire meaning of ruthless patience. The hardest part is that patience feels like doing nothing, and doing nothing feels wrong. Our minds are trained to believe productivity equals movement. In an office, you type, attend meetings, make calls, constant motion. Sometimes in trading, the smartest move you can make is to sit still and do absolutely nothing. It feels unnatural. Your fingers itch to click, and your brain insists that movement equals progress. And then you break discipline. You jump in too early. You chase, you take trades that almost fit your rules. You end up sabotaging yourself. True patience isn't laziness, it's active waiting. It's the conscious choice to protect your money until your perfect setup appears. That kind of control takes strength because society glorifies speed and quick results. But trading rewards the opposite. In the markets, the tortoise doesn't just beat the hare blows up his account while the tortoise slowly builds freedom. There was once a legendary trader in the early 1980s who made hundreds of millions, yet he only traded about 15 days a year. People thought he had some secret power, but his true edge was discipline. He knew his system so deeply that he could spot it instantly, and on all other days, he simply waited. He said the waiting felt as boring as watching paint dry. But when the right trade came, it was like stepping in front of a speeding train with perfect timing. That's ruthless patience, waiting for the train you know will arrive, not chasing every shadow that moves. To build that mindset, you must redefine what winning really means. Winning isn't making money every day, it's sticking to your plan every day. If your plan says only trade under certain conditions, and today doesn't meet them, not trading is a victory. The impatient trader measures success in profits and pips. The patient trader measures it in avoided losses and protected energy. This shift in mindset removes the pressure to force trades. Think about what impatience really costs you. Every early entry that fails chips away at your confidence. Each unnecessary loss pushes you to fight harder just to get back, and that pressure makes you trade even worse. This is the downward spiral that destroys traders. Ruthless patience breaks that loop before it starts. It acts as a shield against your own worst impulses. Of course, patience isn't natural. It's a skill that must be trained. And it starts with clarity. Without a clear trading plan, patience is impossible because you won't know what you're waiting for. The mind hates uncertainty. Without clear rules, it convinces you that any setup is good enough. When you know exactly what your perfect setup looks like, you can confidently ignore everything else. The clearer your plan, the easier it becomes to stay calm through the noise. In 1995, a futures trader named David H. was trained by a top pit trader in Chicago. The mentor told him, "If you can stand here all day and make 0 trades, you're ready to be a pro." At first, David thought it was a joke. Why become a trader if you don't trade? But after blowing 2 accounts, he realized the truth. The mentor wasn't teaching him to avoid trading. He was teaching him to avoid bad trading. That year, David practiced waiting, skipping dozens of setups, taking only the ones that fit perfectly. By year's end, his win rate jumped by over 40%, not because his system changed, but because his patience did. The real test of patience comes during drawdowns when you're losing and want it all back fast. The impatient trader doubles down and forces trades. The patient trader accepts the loss, steps aside, and waits for his proven edge to appear again. That's why the patient trader survives, while the impatient one burns out. Patience is also the foundation of scaling. If you start with $100 and act in haste, you might double it fast, only to lose half just as quickly. But if you stay patient, even a small 5% growth each month compounds into something powerful. Slow, steady growth builds empires, while impatience only builds explosions. One of the hardest parts of patience is dealing with what-if moments. You skip a trade that didn't meet your rules, and then it wins, making your brain scream, "See? You should have taken it." But the truth is, a strong process will always let some winners go. That's not a mistake. It's the cost of staying alive in this game for the long run. Your goal isn't to grab every winning trade out there. Your real task is to take only those setups that match your proven edge. The market will never stop giving chances. Missing one trade doesn't hurt. Breaking your own rules does. Patience also plays a huge role once you're already in a trade. An impatient trader kills his own winners early, scared of a possible reversal. But a patient trader lets the full move unfold, trusting the math behind his system. That's why patience isn't just about waiting to enter. It's about every stage of the trade's life, from spotting the setup to letting it finish. Patience is the thread that keeps your discipline together. Understand, ruthless patience doesn't mean being perfect. You'll still take bad trades sometimes, and you'll still exit too soon. But the real goal is to make patience your default reaction. The more you train it, the more natural it starts to feel. And soon your trading account will begin to show the difference. Fewer trades, better accuracy, less pressure, more freedom. If ruthless patience had a picture, it would be a lion hiding in the tall grass. The lion doesn't run after every antelope it spots. It waits. It watches. It studies its prey. And when the right one finally gets close enough, it attacks with perfect timing. That's the mindset that keeps a trader alive, not reacting to everything, but waiting for the right moment. In the end, ruthless patience isn't just for trading. It's a lesson for life itself. It teaches you to prefer quality over quantity, to trust your system, and to stay calm when others panic. It's not flashy. It's not thrilling. But it's what separates winners from the rest. If you can't master this, your small account won't grow overnight, but it will grow beyond imagination. One of the hardest lessons in trading is realizing the market doesn't care about your feelings or hopes. The market isn't your friend, and it's not your enemy either. It simply mirrors your discipline. Most traders lose because they're emotionally attached to every trade they take. They act like every position defines who they are. But no single trade defines your career. What matters is consistency across hundreds of trades. A trader who loses $100 feels the pain, but the undisciplined one feels something more dangerous, the urge for revenge. That's where revenge trading begins, when you start chasing illusions instead of setups. You must detach emotionally from every outcome. A loss is not a threat. It's a normal part of the process. I've seen traders with sharp technical skills fail because they couldn't control their emotions. One of them had a 60% win rate, yet kept losing big because he panicked too soon. He'd close early or even reverse his position out of fear. His charts told him to wait, but his emotions screamed to act. He wasn't losing to the market, he was losing to himself. That's why mastering your emotions is not optional. It's survival. Think of it like flipping a coin. You know that in the long run, the odds even out. You wouldn't panic after a few losses because you trust the math. Trading is no different. One loss or even 10 in a row means nothing if your edge is solid. But once emotions take control, discipline disappears, and trading turns into gambling. Back in 2008, during the financial crash, a trader I knew made over $400,000 shorting bank stocks. His system was flawless, his timing perfect, until one loss broke his discipline. He started forcing trades, chasing the market, desperate to win it back. Within months, all his profits vanished. Later he admitted, it wasn't the market that destroyed him, it was his ego that couldn't accept defeat. He wanted the market to make him feel right again. But the market doesn't exist to heal your feelings. The mindset you need is one of calm separation. When you enter a trade, you must already accept the possibility of loss. You're not in this to prove you're right, you're here to follow your system. If the plan says close the trade, you close it. If it says hold, you hold. There's no place for maybe it'll turn around thinking. That's emotion talking, and emotion kills consistency. Top traders I've met treat every trade like one grain of sand on a beach. They know one grain doesn't define the beach. A single win or loss means nothing in the long run. They don't celebrate like crazy after winning, nor break down after losing. Their full attention stays on the process, not the results. That's the real secret, process above outcome. Because once you start judging yourself by one result, emotions take the driver's seat. Detachment also means leaving your ego out of the trade. Your trades are not your identity. Losing one doesn't make you a bad trader, just like one win doesn't make you a genius. Ego pushes you to prove something to the market, but the market never cares. Ego keeps you stuck in bad trades because you hate being wrong. But markets reward humility. Traders who cut losses fast survive longest. A humble trader lasts longer than a proud one clinging to mistakes. I tell beginners this, your job isn't to predict. It's to manage risk while your edge unfolds. Once you understand that, losing trades stop hurting your pride. They just become part of business, like routine expenses. Think of it like running a restaurant. If you have to toss a few meals because an order got canceled, you wouldn't shut down the place. You'd keep serving, knowing the system will stay profitable overall. Trading works the same way. Losses are simply the cost of staying in business. Back in 1995, there was a small-time trader from Chicago who began with just $2,000. He traded options and for an entire year barely managed to stay break-even. But what made him different was how little he cared about each win or loss. His only focus was improving his process, not chasing perfection. Every trade for him was a test of patience and discipline, not a test of intellect. By 2001, that $2,000 had grown into $3 million. When people asked how, his answer was unforgettable. I stopped needing the market to make me feel good. I just trusted the math. That is emotional detachment in its purest form. And this mindset can be trained. Step 1. Decide your risk before every trade. If you're ready to lose $50, accept that loss before you even click buy or sell. That way, when the loss comes, it's not pain. It's just part of the plan. Step 2. Forget the last trade. Focus only on the next one. Win or lose, the last trade is gone. The next one is your real test. Step 3. Trade small enough that losing doesn't shake your emotions. If fear clouds your mind, you're risking too much. Once emotions are stripped away, clarity takes over. You stop chasing bad setups and start executing with precision. Over time, that precision is what the market rewards. The market is harsh, but it's fair. Discipline always wins in the long run. But if you let emotions rule, the market will repeat the same painful lesson until you learn or quit. Emotional detachment doesn't mean not caring. It means caring more about discipline than any single trade. It's the same mindset poker professionals live by. Sometimes they lose with a strong hand. Sometimes win with a weak one. The key is play the right strategy every single time. That's how small accounts grow into fortunes over time. That's how $100 slowly turns into $1 million. Most traders miss this truth. Trading isn't about controlling the market. It's about mastering your own mind to survive and thrive in chaos. Once you stop needing emotional comfort from the market, you finally trade with freedom and logic. And that freedom, that's where the real money begins. Markets are alive, ever-changing creatures. They evolve, punish arrogance, and reward those who adapt without ego. The power to adapt endlessly, that's the ultimate trading edge. Because trading success isn't about perfect prediction, it's about staying alive long enough to win. It's about adjusting when reality shifts without warning. The traders who last long enough to turn small capital into something life-changing know one truth. Nothing in the market stays the same forever. Not trends, not volatility, not even the patterns you trust. The moment you start believing a method will always work, the market shifts and proves you wrong. And that's the trap. Your mind loves what feels familiar. It pushes you to keep repeating what feels comfortable. But in trading, that comfort can destroy you. Back in 2008, when the global financial crisis hit, many traders who depended on steady long-term positions were thrown into chaos. The ones who quickly adjusted, shifting to short-term plays, tighter risk control, and fast exits, didn't just survive, they grew. They didn't waste energy blaming the market, hoping it would return to normal. They accepted the new reality and changed with it instantly. That's the mindset, constant evolution, not attachment. You see your strategy as a tool, not your identity. If one tool stops working, you replace it without hesitation. Many traders fail because they mistake stubbornness for consistency. True consistency means following solid principles over time, not refusing to change when the market demands it. And this mindset requires you to crush your ego every single day. Ego makes you believe you're smarter than the market. It convinces you your analysis can't be wrong. It whispers, hold a little longer, it'll come back. Ego wants to win arguments, not build wealth. But the adaptive trader only cares about staying profitable, not proving anything. Look at nature. Every species survives by adjusting to its world. Those that can't change fast enough disappear. Trading works the same way. Your strategies, your risk, even your schedule must evolve with the market. Some months you'll trade aggressively when volatility offers opportunity. Other months, you'll sit back, protect your capital, and wait for clarity. You adjust calmly, without guilt, frustration, or fear of missing out. Every market condition is a lesson if you pay attention. A trending market teaches momentum and control. A ranging market teaches patience. And an unpredictable market teaches risk management. The weakest traders complain about bad markets. The strongest study them, adapt, and use those lessons to sharpen their edge. The secret is to make adaptation your daily habit, not just a reaction when you're cornered. If you only evolve when forced to, you're already behind. Keep testing new ideas, time frames, and risk methods before the market forces you to. So when the storm comes, you're not panicking, you're prepared. Like a fighter trained in many styles, you'll always have an answer no matter the opponent. In 1995, a trader named Marty Schwartz, known as Pitbull, became a legend in stock index futures. When he noticed the game evolving, he didn't cling to his old habits. He expanded his knowledge, studied new markets, and reshaped his risk profile. That flexibility kept him profitable, while rigid traders lost everything. His edge wasn't just skill, it was his refusal to stay the same. Relentless adaptation means embracing discomfort and uncertainty. Growth begins the moment you stop needing comfort. If you only take trades that feel safe, your potential stays small. The market will always test your comfort zone. That's its job. Sometimes it'll speed up, sometimes it'll reverse, and sometimes it'll just move sideways. Your job is to move with it, not against it. But remember, adaptation isn't only about charts and setups. It's also about your mental state. Some days you'll feel sharp, focused, and ready. Other days you'll feel tired or emotionally heavy. The adaptive trader senses this and adjusts. Maybe smaller trades, fewer entries, or no trading at all. They adapt not just to the market, but to themselves. This mindset completes the foundation, because without it, discipline and patience can be destroyed by one act of stubbornness. The market doesn't owe you success. It doesn't care about your hard work or last year's results. It rewards only those who move with it like water, flexible yet powerful. If you truly want to grow $100 into something big, you must keep reinventing yourself. Every stage of progress demands a new version of you. The beginner learns risk control. The intermediate learns emotional control. The advanced trader learns to read the market's rhythm almost instinctively. And even then, the evolution never stops. Sometimes adapting feels like starting from zero, and that's okay. Each time you adjust, you strengthen your survival instincts. You prove you're here not for fast wins, but for longevity. The trader who turns $100 into a fortune isn't the one with a perfect system. It's the one who keeps evolving endlessly. Remember this, the market owes you nothing. It rewards only adaptability. The real winner isn't the one who fights the market. It's the one who flows with it so well, they never need to fight. If you followed every chapter till now, you hold the 4 pillars: discipline, patience, resilience, and adaptation. Master them, and your small account won't stay small. It'll only be limited by your imagination and your willingness to grow. Always remember, the market reflects who you are. If you're rigid, it'll break you. If you're fluid, it'll carry you forward. Be the trader who bends, shifts, and transforms as needed. That's how you survive. That's how you thrive. That's how you turn $100 into $1 million. If you enjoyed this video and want more powerful insights on trading psychology, subscribe to the channel so you never miss the next one. Now, I want to hear from you. What's the biggest mindset shift you've made in your trading journey? How did it change your results? Drop your answers in the comments. I read each one personally.